Hello, today I'm here to talk to you a little bit about the Canadian Emergency Response Benefit, known as CERB or EI as well, and what the difference is between the two and what difference it makes in terms of what you're receiving and the tax implications. So I wanted to start off by explaining a little bit about the differences between the two and the similarities. Both are there to help Canadians who are not currently employed due to COVID-19, although EI also helps you if you're not currently employed due to other reasons and you've lost your job. If you applied for EI before March 15th and were approved, you are on EI program. If you applied after March 15th, you're actually on the CERB program. So there's a couple of differences between these programs, one being the amount of money you get, which of course is important, but also the tax implications. And that's what I want to talk to you guys a little bit about today. So with both of these benefits, they are considered taxable income, meaning that you will eventually have to pay tax on what the government gives you. With EI, there are taxes withheld at source. With CERB, there are not. So that makes a difference in terms of what you're going to go owe at the end of the year. Although both can cause you to owe money at the end of the year. So in Canada, we have a marginal tax system, meaning that the taxes you pay are kind of like a ladder or a staircase. So you pay less tax at the first step you step up. Then as you continue to step up the stairs, the tax goes up incrementally on each stair that you climb. So if you are receiving the EI benefit, they are withholding tax. But they are withholding tax under the assumption that you are at the bottom stair and that you will not have any other income. Meaning if you go back to work, say later on this summer, and you have full income for the rest of the year, it could push you up the ladder from a marginal tax perspective. As you climb the ladder on marginal taxes, your average tax rate increases and you could end up owing money at tax time on that EI benefit. CERB is definitely going to have an impact on tax benefit. They are not withholding any tax on CERB, meaning they are giving you the full $2,000 and you will be responsible for saving some of that money and paying the taxes due next year at this time. So if you are getting CERB and all you get all year is CERB, you don't have any other income, you never go back to work, hopefully that's not the case, then you will fall into the lowest tax bracket. You'll have an income of about $24,000 a year. Your marginal tax rate will be 20%, and your average tax rate, due to different tax credits you receive, will be significantly lower. You will owe that tax at the end of the year. If you go back to work, you have full-time employment, things are spectacular, you end up in the highest tax bracket. You make over, let's say you make $250,000 when you return to work for the rest of the year. Well, then your CERB is being added to that $250,000 of income. You are in the highest marginal tax rate at 53%, and you are going to have to pay back 53% of what you got in CERB when you file your taxes. So it's really important to know what tax rate you think you will be at the end of the year, and keep in mind that perhaps putting some of this money aside now in a tax-free savings account so that you have the ability to pay this back at the end of the year is very important to do. If you have any questions, if you'd like to look at what the possible tax ramifications are if you're receiving these benefits and how much you should set aside to pay some of these taxes next year, please feel free to reach out. I'm here to help and happy to go through individual numbers with you. I hope everybody's staying healthy and safe, and we will talk again soon. Have a great day. Bye now.